So, JC, last week we had new all-time highs in the major indexes, the S&P, NASDAQ. This weekend we had monthly candles come out. We opened up the week, new all-time highs for the Dow. Sounds pretty bullish to me. What are your thoughts on this?
There's no question. We got new monthly candles on Thursday, new weekly candles on Friday. I mean, you can't ask for anything better than that. And what was the common denominator? New all-time highs. S&P 500, Dow Jones Industrial Average, Dow Composite, NASDAQ Composite, NASDAQ 100, S&P 1500, Global 100, JP Morgan, Technology, Consumer Discretionaries, Microsoft, Apple, Google. All of these names are making all-time highs. So what do we know about that? I think that it's further evidence of what we've been talking about, that most of these indexes and stocks and sectors have really traded sideways for 21 months. And now they're resolving higher in the direction of the underlying trend, which obviously was higher prior to this consolidation, and we're resolving higher. I think that's perfectly normal. What's wrong with that?
So what is different about this time, if anything? We've made new all-time highs, a number of times this year and failed to hold them. What's different other than, more time passing by and, like you said, it being a 21-month consolidation now as opposed to 18 the last time we were here?
Well, what we want to do is we want to look at the market environment and say, okay, are there more things suggesting that we need to be buying stocks and looking for stocks to buy? Or is this a type of environment where we need to be looking for stocks to sell, right? And instead buy things like bonds or gold or something like that, right? So when we're seeing consolidations resolve higher, not just these longer term consolidations, the 21-month stuff that we're talking about, but shorter term, things like Microsoft, things like technology that have been consolidating for 3-4 months, and we're saying, all right, the resolution out of this is going to be important. Things like industrials. Remember about a month or two back, you and I did a video about making the bear case, right? We're super bullish stocks, got to be buying stocks, we're going to break out, but let's make the bear case. And remember, one of those parts of the bear case was that industrials would have this massive failed breakout and it was going to lead to a massive destruction. That was part of the bear case. Well, that's been invalidated by industrials making new highs. So it's examples like that are piling up that say, no, those bearish circumstances did not happen, quite the opposite, and we're making new highs.
On that topic, now that we're at new all-time highs and, it seems like breadth is a lot more positive this time around. We're seeing a lot more areas kind of accompany the market to at least new quarterly highs or 52-week highs, if not new all-time highs. So what is out there right now that concerns you? If you were to make the bear case now, what would you point to?
Well, it's not so much that anything concerns me, because the things that we spoke about, right, that we would say we made the bear case. Also remember Russell 2000, small caps and transports, we needed them to hold, or the bulls for that matter, not us, we don't really care. The bulls needed small caps and transports to really hold those June lows. And they did. So I think a lot of people are looking to maybe the 52-week high list and saying, well, it's not expanding. Well, fine. But I think it can ultimately get there before you start making new 52-week highs. To your earlier point, you got to be making monthly highs. You got to be making new quarterly highs. And then ultimately that'll show up on the new 52-week high list. But that breadth improvement is a process. And I think you hit it right on the head. We're already seeing those early breadth improvements, which to me, I think makes perfect sense. We're not seeing any divergences. We're not seeing breadth deterioration. We're not seeing an expansion of new lows. All of those things, it's not that it concerns me. Those things would start to happen if we're in a market environment where we'd rather be selling stocks. And then I wouldn't say it would concern me, but it would certainly point to selling stocks rather than buying them. That's probably what I would look for, and we're just not seeing that at all yet.
That's really insightful. That was great. How about internationally? Because when I look at something like the Momentum Report, which we provide to our institutional clients, we show the new highs across different time frames. And while only Switzerland and the S&P 500 made new all-time highs this past week, I think 65% of the list made new quarterly highs or new 63-day highs. So it's almost 2/3 of our international ETF list. That's 50 ETFs on there.
It's a lot.
Is at a new high over the short term. What do you make of that?
I think it's just further evidence of what we're talking about. You might not see the new 52-week high list increasing or the all-time high list increasing, But you are seeing the month high list increasing, the quarterly new high list increasing. That is breadth improvement. The world doesn't start and end with the new 52-week high list. There are other areas to measure breadth, and in some areas, you can't quantify them. It's just, that's where the art form comes in. Are we seeing more positives or are we seeing more negatives? There's a guy, Frank Teixeira, he used to say, he was a Wellington fund manager, he used to say, well, on one hand, you've got this and this and this and this. And on the other hand, you've got this and this and this. Well, whichever one weighs more, that's really where we want to lean, and we'd rather err in that direction. And I think this is just a perfect example. We are seeing more and more evidence piling up of breadth expansion, further participation, and more reason for us to look for stocks to buy than looking for stocks to sell because we're seeing deterioration in the market. It's quite the opposite. Now, another thing I'll point out is the intermarket complex. Now, remember, if interest rates are making new lows and interest rates break down, that's probably not happening in an environment that stocks are ripping. So that's one thing I'll look for in the bond market. Another thing we're going to look for in the commodities market, look for gold, right? Gold's been under pressure since achieving our upside objectives, right? Getting in the upper 1500s, GDX around 31. That area for both those assets is resistance. And until that breaks out, precious metals are nothing we want to be involved with. But if you start to see interest rates making new lows, you see gold making new highs, that I think would be maybe an intermarket signal of a warning perhaps, but that's not happening at all. Interest rates are holding above those former lows. Gold is still below overhead supply. Stocks are breaking out. We're just seeing more and more expansion, and that's the type of market environment where we want to be buying stocks, not selling them.
So if you want to be buying stocks, what are some of the better areas of the market that you expect to outperform? Where would you want to put your money to bet on this coming rally?
If it ain't broke, don't fix it, Strazza. That's how I learned it. So, I think you want to stick with the names showing positive momentum, stick with the names showing relative strength, stick to the names that have already been making new highs, not the ones now trying to play catch up. I think there's no reason to get cute. The stuff that's been working has already been working. Just the fact that indexes are now making new highs doesn't change the fact that we already had certain stocks, certain sectors, and not to get too broad, but I mean, obviously technology, semis, those things have already been working. That's just one example of many. But just look to the stuff that's working. I don't see any reason to get cute.
Sounds good. All right, well, thanks for that. We will check on these developments and check back in next week.
All right, Strazza.